Hello, my name is Eddie Topic. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Please kindly pay no attention to any special coloured highlighting on and for labels and text boxes on my daily chart. Sometimes my charting system plays silly buggers with my labelling and changes the colour for no reason. There is no special meaning to any coloured labelling. Anyway, the story of this market is a story of three channels. An original mid-June to early September shallowy bear channel held in late August, started in late August, held at the important 38.2% absolute Fibonacci support below at 521. Which ignited the bullish incentive enough to push up and out of the bear channel. The subsequently created early September to mid-October bull channel that peaked with a V-top formation in early to mid-October. And the most recent example, the dark blue highlighted mid-September to early November bear channel, which I acknowledge may be morphing into a possible descending expanding wedge pattern. That's currently 539 to 585. Especially with prices last week just going sideways and forming an extension to the V-top. Three things to note now. The September to October bull channel and the October to November bear channel come descending expanding wedge pattern together made the previously mentioned V-top pattern. The neck for such a pattern is approximately between the December 2020 low at 566 and the bright red neckline extension, currently at 562 of the February to April reverse head and shoulders bottom. After hesitating and forming the extension over late October to early November, prices this week busted down through the bright red neckline extension and are looking now like stabilizing below it and the whole V-top. Now in doing so, the market has reached the primary target X at 564 and the harder to reach secondary target X1 at 561 for the breakdown from the original early September mid-October bull channel. This move down now brings up new potentials, though not necessarily targets, of down around the 38.2% Fibonacci line at 521. It'll be interesting to see if prices can overcome congestion at 545 and a September 2020 low at 540 to get down there. The final thing to note is that last Friday, the combination of the declining short moving average, currently at 578, the flatlining short medium moving average, currently 593, and the very slowly declining long moving average, currently 591, made a bow tie formation. Now, I am the first to say there's not a great bow tie formation, as the moving averages are in the wrong order, and the short medium moving average is flatlining, not heading lower. But all that being said, it does look like a bow tie formation. Therefore, look to the immediate direction of the moving averages, principally lower, to show guidance on the market. Plus, look out for volatility between 15 to 20 sessions after the crossover. So between the 29th of November and the 6th of December, look out for volatility. Chicago corn. The gapping break higher in mid-September led to a small late September, early October bull channel that pushed up over both the gold long moving average, currently at 432, and the November 2020 high at 439. Eventually peaking up in the 450 to 455 area in what appeared to be thin air, but in reality was a congestion seen from March to June, as well as back in January and February. Prices then dropped away through most of October, only as far as the green short medium moving average, which is currently at 428 in mid-October, but once again trying back up. This time the market was initially capped by the gold long moving average and conversely held up and helped up by the 50% absolute Fibonacci line at 425, such that last week prices pushed up over the gold long moving average and the November 2020 high at 439 in what was a small mid-October to early November bull channel, currently 434 to 452. Last week I said, and I quote, "The key question will be whether prices can attain the early October highs between 450 to 455, or will the erosion of the bullish incentive by, for example, the gold long moving average or the November 2020 high at 439, whether this will be enough to prevent prices from trading higher. I doubt, as there is quite a bit of ammunition stacked up below between July and September." A further question is what pattern or patterns will emerge from the recent action. End of quote. Well, looking at the action this week, you can see that I was right in asking that the question about the 450 to 455 area topside, but in error about the strength of the support below. It was a lot less than I imagined. And of the effects of the erosion of the overhead gold long moving average and the November 2020 high were greater than I imagined. And we have seen prices turn lower, and yesterday dropped down and closed below both the recent lower bull channel line and the gold long moving average, though they have reverted back up today. We still have the rising green short medium moving average, which unsurprisingly today below has held up the market, as well as the 50% absolute Fibonacci line, and further down the flatlining medium moving average, currently at 417, and the December 2020 low at 414. But the image you can see is not good of a lower early November high compared to the early October high. So you've got a lower early November high compared to a earlier early October high. So the nearer high is lower, and that is a bearish sign if ever there is one. So please be prepared to possibly see further pressure on the downside, and even the development of an early October to date bearish flag stroke halfway hesitation pattern possibly emerging. Kansas City wheat. Much like Chicago wheat, this market excuse me, is the story of three channels. The oldest and the largest was the late June to very early September shallowy bearish channel that eventually ended up with a spiked down flattened V bottom at the end of August. Secondly, there is the late August to mid-October bull channel that was eroded by both the slowly declining long moving average, currently at 600 even, and the medium moving average, currently at 592, as well as the interesting 38.2% Fibonacci line of the big old 2011 to 2019 move at 618. And finally, the most recent, the dark blue highlighted early October to date bear channel, currently 542 to 576, that looked good even between the last week of October and the first week of November, when it started to make a small extension to the V top. And I was based interesting on the bright red lower trendline extension, currently at 576, of that big old November 23 to April 24 descending triangle. In part, this extension was due to a pattern I spoke about 7 weeks ago when I said, and I quote, "During February through to April, we saw the development of a rectangle pattern based on the 551 to 590 area. Please remember this area as it will become relevant to more recent action." End of quote. This area was the origin of the original larger bear channel, which I'd previously mentioned right at the start. Anyway, this week's prices have punched down through the bright red neckline, and more importantly, the congestion from the old rectangle pattern between 551 to 590, though we've moved up today, while still more or less staying within the dark blue October to date bear channel. This adds further to what I said last week, and I quote, "All this also leaves two potential targets below. The primary target at 531 and the secondary target harder to reach target X1 down at 527. These are the targets for the break below the middle bull channel, the late August to mid-October bull channel." End of quote. Last week I was having some doubts about these, but that has been set aside now. These two targets are in the frame now, as is the 38.2 absolute Fibonacci line at 533 and the late August low at 527. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Service International Limited. And here comes the final important bit.